Welcome to the relative strength index video. Some call it relative strength index, some people call it relative strength indicator. It doesn't matter. They're all mean the same thing. So, RSI, relative strength index. So we just use defaults. I want to be very clear, right? I don't So apart from the moving average where you might have to find different parameters that work for you, every other indicators that I'm showing you per per uh, Sophia's request, they're all going to be standard default settings. So this is a 14-day average, basically. Okay. What is the RSI? Relative Strength Index tells you if we are going into overbought and oversold territory, meaning it's trying to predict turning points in the market when when it starts to go down or starts to go up. So basically tells you here that much of the action rests in between the 70th percent and 30th percentile. So if we go above any of those, then the market has taken it too far too soon and too quickly and will most likely correct. So something like this, where it breached above 70, most likely it's time to start thinking about taking some profits or selling it. Same at the bottom. If we breach this line below, it's also time to let it go. Okay. Now, it's very important that you understand it's not that easy. If it was all that easy, we'd all be billionaires, right? But this is an example that that you want to look at. This went below. You're automatically thinking, okay, I should start buying. But as you can see, it kept going down before maybe turning again, and it kept going down and down and down and down. So it never showed or gave you a real indication that that was really a bottom and we would turn back higher. Maybe a little bit of a pop, but not quite. So the same is true for upside moves. It doesn't mean that it's going to be perfect. Like something like this where I went up and I started to go down, a trader would automatically think, "Oh, I should start selling because it's already there." And you can see it goes back up first and all that. Right? You will notice this as you keep using these indicators and you will think this is really crazy. None of these work. And you will get through that. And that's why I've been asked to make these videos so that you understand how to use them, but also get a trader's perspective of why they're not really effective. I don't use them, right? Most traders don't. But because you might be in that phase, well, I'm assuming you might be in that phase because Sophia is asking me. You're in that phase that you're getting so mesmerized by indicators. We might as well show you exactly how to use them if you're going to force yourself to use them, and then learn for yourself or see for yourself how it won't work. Okay, so that's what the RSI is for. It's to spot when the price has gone too far too fast, and it might reverse from the upside and the downside, right? All default. So basically, you're looking for something that's went above 70, then you're thinking about shorting. That's what the indicator is supposed to be asking you to do. And then when we go below 30, you start to go long, but it's not perfect, as you can see, no doubt. Like here's a multiple. This one is where when people have luck and they're making money, they're not complaining. But when they see a situation like this, and even though I'm using a daily chart, this is also valid for anything lower than 15 minutes or any sort of different charting time frames. This here, right? If you made a mistake thinking, okay, we're definitely above 70, I'm going to start shorting. Look at this. This went really high before it started to come down, right? So again, if these indicators were so awesome, you know, we'd all be rich, right? And that's why it's just not enough. If you're trading just an indicator, it's just not enough. And remember what I said, it's lagging, right? So look at here how it bounced interim here. So it bounced temporarily here. By the time you're like, okay, I should probably go long, well, you're kind of already late, a little bit late. So that's the weakness there of the relative strength index. But at least now you know how to use it properly if you insist on using it for your own trades.